Mihir, I'd like to bring you in this discussion. Granted, 10% in the past wouldn't have worried, just that the last 4 years, we're not used to such moves as well. And this 9-10%, cool. I agree with Deepak, it's not 10%, it's slightly less than 10.
Yeah.
But this corrective move has happened from September 26th or thereabouts, when we were sitting pretty at 26,200 or thereabouts. Now, do you think that this one-way slide is overdone, or was this warranted, and can it do more?
So, Neeraj, again, Tamanna, I think we discussed it last week also. First is that it's not really a correction, frankly. The Nifty is something that we are obsessed about, but the Nifty is down about 9% from the peak. But if you look at the small cap index, which is the much wider market, that's hardly down 6% from the 52-week high. That's one data point. Second is, let's put the perspective of today's fall. Let's put into perspective today's fall against what happened last week. Last week, the Nifty was up 0.5% total, whereas the small cap index was up almost 6%. So, it's just giving back a little bit of the gains of last week. It's about 6% down from the 52-week high. So I really don't think it's a topic worth worrying about, frankly speaking. Second point, which I would like to mention, is that our obsession with Nifty is a bit of an issue, because now it's more and more not representing the domestic economy. If you look at the Nifty components, the largest is financial services. Let's put that aside. But then we have big absolute earning contributors like energy, oil and gas, metals, cement, IT, which are all globally linked. The thing is that China, the biggest consumer of commodities, is slowing down, and commodity prices have been weak. To that extent, they will put pressure on the Nifty earnings. In fact, we all know that Nifty earnings overall in this results season have been cut. But if you analyze why the Nifty earnings have been cut, earnings estimates for FY25 and FY26, why they have been cut, a large chunk of the cut is happening because of these global sectors. So there is a little bit of disconnect growing between the Nifty representing the Indian domestic economy and the wider market. So really, if you look at the wider market, small caps, mid caps, nothing to worry about. Nifty fallen about 8.9% from the peak. It's been a one-way slide probably, but I don't think it's anything that we need to worry about so far.
What we've established so far in the show, it's not that much. It's looking sharper than it is because Diwali Muhurat trading was a little optimistic. And don't worry so much. It's not that far away from the peak. It's not that serious. So then let me ask you this, Mihir. More to come? More to come, and would you be deploying right now?
Certainly, as you know, we launched a new fund which just closed last week. So we have some ammunition to deploy. I'm quite happy about the fall. So that's one. The second is the market is also probably globally taking a bit off the table for the outcome of the election results in the US. Nobody likes uncertainty. So when there is an event in the next few days coming up, probably you just want to keep some dry powder. And that's what things are happening. Incidentally, if you look at Asia, frankly, it's not down that much. US futures are also not down that much. I think this was more of an India reaction to, as we discussed, the Muhurat trading, and probably the fact that small caps did run up very sharply in the past week.
So good timing for you, Mihir. I find that interesting. As a fund, as someone who's running a fund, sitting with capital right now, and the opportunity to give good returns because markets are dropping. What are you looking at? What are you finding interesting? And Deepak, I'm going to come to you on the same question in just a bit. But first, Mihir, let's get your view.
So it's the same themes that we've liked for quite some time. The domestic themes, basically, whether it's a premium consumption or financialization of savings, which means the non-lenders, the physical asset creation themes like cap goods, infra, real estate, and construction, those kind of themes, including the sectors where the government is focusing on, like power, defense, railways. So all that bunch, and the new age companies, which of course are disrupting the existing businesses.